Hello everyone, thank you for joining on my another live stream. So today it's a Saturday on the 4th of July 2020. So I hope you're having a great weekend today. I was actually outside and just came back home. So I was kind of in a rush, came back home and just get to prepare everything here. So alright, so how are you everyone? Thank you for joining. Okay, so I will talk about the losses today. So this is going to be the mental, psychological, and also money management strategy that I will be talking about today. So if you're new to my channel, my name is Kei first of all, and I am a Forex trader in Japan. And every day, basically every day, I talk about different topics on this YouTube channel. So today is a Saturday. So every Saturday, I talk about some psychology or money management related topics because market is closed anyways. So I focus on these kind of topics. So that's why today topic will be about the losses. And on Sunday tomorrow, I will give you the weekly Ichimoku Forex forecast. So, and also Monday, Tuesday, Wednesday, Thursday, Friday. Basically, this is a schedule. This is the weekly program guide. And if you want to know the specific topic, what I will be talking about upcoming week, tomorrow, or next week, and you can actually come to my homepage and you can click on this YouTube and there is a live schedule here. And if you can click on here, then you can see all the schedule that will be coming up in the month of July. So I've created all these curriculum or the like a syllabus course so that you can expect what I will be talking about in the future. And the topics might be changed, right? Topics might be changed due to the market situation. And also when I can't do the live for personal reasons, I will be uploading a video instead so that you can at least learn something new from my channel every day. But this is a basic agenda of what you can expect in the month of July on my YouTube channel. So if you haven't subscribed yet, please do and click the bell button so that you get notified as I do these lives every day. So today's topic is going to be about the loss. So here is a PowerPoint, the slide that I just created earlier quickly. So if you find some errors in typos, sorry in advance. Alright, so let's see. Hi Jonathan, thank you for joining. Lord, Annabella, and Muchuno, Sekid, Duke, thank you for joining. Mom, and Dr. Sanjay, Anthony, Roy, thank you for joining everyone. Alright, Josie, good to see you. Good to see you. So today's topic is about 3 simple steps to avoid losses. So, before starting anything here today, just a disclaimer, this strategy or the knowledge is based on my own experience, so when you take trades, please do your own risks. So, losses is kind of negative word, negative impression. Especially when you take trades in forex stocks or cryptocurrencies, whatever the trades you're taking, the losses are the negative like words. So today I want to address how I think about the losses and also the different kind of losses I want to talk about and which losses you focus on and which losses you shouldn't take. I will talk about these 2 different losses. And in the end, I will give you an example that how you can exercise the mindset towards the losses in your daily life. I will give you an example from the supermarket shopping, and I will present how you can exercise by yourself in the daily life about the losses as an example. So you can enjoy the video until the end that way. So first of all, the losses do happen. You might already know that the losses do happen. There's no strategy that's 100% winning rate. The losses do happen. So, but the mindset is very important. How you take the loss or how you regard the loss is very important. The bias or the perspective to the losses. So let me ask you a question, because this is live stream, and so we can be interactive here. So let me ask you one simple question. What is a loss to you? What is a loss to you? Especially in trading. In trading, what does that mean? What does loss mean to you? And if you happen to this video on an archive, please write your comment below so that I know I will be reading through your comments too afterwards. But my question is, what does loss mean to you? Before taking further, let me ask you this simple question. Alright. Hi Richard, thank you for joining. And Dan, thank you for joining as well. Yul, good to see you. Thierry, thank you for joining as well from France. Good to see you. Alright. So if you happen to be in front of PC or in front of the mobile right now, just type your answer. What does loss mean to you? I think there are many answers to it. I don't expect one single answer to this question, so you can just type your answer. Whatever you feel about the losses, you can just type it out. And if you happen to see this archive, you can type your comment on the comment box below. And every comment I watch and read. So, and the comments that I watch or read, I make sure to put the good button so that you know I'm reading through these comments. So what does loss mean to you? A loss is a good way to improve our experience. Sure. So that's a tough mentality right there. A loss is a good way to improve our experiences. Sure. Okay. You can be yeah, just it can be any answers. Don't worry. I won't yeah, get mad to your answers. Losses mean losing money, health, and mental sick. Okay. So that's sounds very painful. Not able to take another trade. Okay. You get stunned. Yeah. Losses never hurt me. Okay. That's a tough mentality right there too. Losses never hurt me. All right. Investment for the wins. Sure. Investment for the wins. Yeah. In order to get returns. Yep. Losses is a part of the probability. Sure. Right. Winning rate or winning and losing are both probabilities. Yep. Losses down mentally. All right. Losses happens when price bounces to the stop loss. All right. Yep. When the price gets to the stop loss, then you get losses. Yep. Going out of a walk. Sure. You just go out, shut down the PC, and just get out. All right. Loss means I have to improve. All right. Yep. You can improve by the losses, which I will also talk about it today. Hi, good morning. No nonsense. Thank you for joining. Loss is the pain of learning. Sure. Pain of learning. Yeah. So it's a pain. 5% of prices. All right. Insurance on my account. Okay. Yep. So yeah, that's true too. I said that the stop loss is like a seatbelt. So yeah, it's like an insurance to protect your account from blowing up. Learn from mistake. All right, learn from mistake. That's a good mentality too. Loss means I am wrong or market says I'm wrong. All right. Loss improve my trading. Sure. Negative result. It actually decrease your account. Failure, defect, and success. All right. Okay, that's interesting. Yeah. Thank you for your answers. It's very interesting. Loss is a part of the trading and inevitable. Sure. It's a part of trading and it's inevitable. Exactly. And that's why learning about loss is very important too. Loss is a way that doesn't work and shouldn't be repeated in the same way. Sure. Yep. It should be repeated in the same way. Okay. Loss is the best medicine for success. Sure. Best medicine for success. Okay. That's the positive mindset. Read defect. Okay. Learning and making strong. Sure. All right. So thank you for answers. These are all actually what I think about losses too. So today, I wanted to think about the losses. So there are 3 steps. Like I said on today's title, I will present you the 3 possible steps to avoid losses. But the losses do happen, so technically you cannot really avoid it. You can never avoid the losses because the losses do happen. So we have to switch our mindset from taking losses to avoiding losses psychologically. So here are some 3 simple steps. So 1, remember that there are 2 kinds of losses. Okay, so I will address 2 kinds of losses. And also, once you remember these 2 kinds of losses, then try to identify which loss the previous trade was. Okay, try to identify which one of these losses were on your previous trades. And then, 3rd step, find a way to turn bad losses to good losses. So let me present step by step. So I will talk about, remember that there are 2 kinds of losses first. Okay. So 2 kinds of losses. In my opinion, there is good loss and there is bad loss. Okay, so good loss and bad loss. So here's another question. What do you think it's a bad loss first? Let's just start from the bad loss. And what do you think it's a bad loss? Let me just wait for a moment until I see some comments and answers here. So let's just focus on the bad loss. And what do you think it's a bad loss? Loss means result of violating from rules. All right. Yeah, even if you follow the rule, then the losses do happen too. So whether the bad loss or not is very important here to think about. So what is a bad loss to you? Bad loss when traders blame the market. Sure. Yeah, it's like a regret. When you regret, that's a bad loss. And blame the market. Bad loss, broken trade rules, no stop loss. Sure. Yep. Hampered capital. Sure. Yep. Entry at wrong area of value. Sure. Entry at the wrong area. Yeah, so basically you are not really following the trade rule maybe at that time. And that's a bad loss. As a result, you might win, but when it goes losses, then it's going to be bad. No idea why I lost. Sure. So you cannot think of why you lost it, and that's the bad loss. Sure. Bad loss is not bad loss is as not set stop loss. Sure. If you don't put the stop loss and the market keeps going against you, yeah. So that's a bad loss. Unexpected loss. Sure. Unexpected. That's right. So if you don't expect the loss, then that was a bad loss also. You have to expect the loss too when you create scenarios. Where risk is not calculated before entering the trade. Sure. The risk management is a key too. Exactly. Yep. I usually take trades where there is a 2% or only 1% risk per trade. So yeah, risk management is also the key. And if you don't manage the risk and get losses, then that's a bad loss too. Alright, bad loss is only when no lessons learned from the mistakes. Sure. Bad loss, unrepeated trade, lack of proper analysis, and impulsive jump into that trade with bad money management. That's right. Yeah, that's a solid statement right there. Yep. Means mistake repeated. Sure. You don't want to repeat the same mistake over and over again. Yeah, that's a bad loss, and that because you don't learn anything from the losses. Trading stop loss and converting opposite trade. Sure. Yeah, you don't want to take trades opposite way, right? As soon as you get the stop loss. Yeah, that's a bad loss too. Bad loss, not knowing why it's a loss. Sure. So you have to know why you get lost. And even before taking trades, you have to know why you put the stop loss right there, so that you know why you lost it. So that's important. More than 2% is a bad loss. Sure. Or more than the risk, more than the drawdown you expect is the bad loss too. If you get more drawdown than expected, that's a bad loss. Lose my confidence to take next trade. Sure. Yeah, if you lose confidence, then yeah, that's a bad loss too. It's like a trauma. Losses become like a trauma. Losses are very bad when you blow your account many times from the same pair, like gold. Sure. Maybe you have some experience in gold. Blow up your account. Yeah, gold can be volatile very much. So yeah, we have to be careful in those volatile market. How to stop from stop loss broken. Yep. Hi Bogan, thank you for joining. Alright. Trading with emotion. Sure. Too small stop loss. If your stop loss is too small, then you get loss cut over time. So alright, so thank you for your questions. Thank you for your answers this time also. So let me move on. So bad losses are there are many definitions in terms of bad loss and good loss. But if we can come up with the bad loss, and if you take opposite psychology, or if you come up with the opposite idea from bad loss, then it becomes a good loss. So let me present 3 simple definition about bad losses here. So 1, too much risk per trade. As you mentioned, too much risk per trade will be a bad loss too, because you don't know how many % risk you're taking per trade, and that is a bad loss because you might lose like 10% or 20%. That was my experience. I used to blow up my account once, and the other one, my drawdown became like 50% because my leverage was too high and my risk per trade was too high too. I was taking like 20% risk per trade, so I blew up account easily. So too much risk per trade will be a bad loss. And also win back loss. So this is another psychology. But if you try to win back the past losses, and if you're still making losses, then that's a bad loss. It's like a negative loop towards the losses. So that's another one. And without expected scenarios. So if you take a buy, let's say, and when you take a buy, no matter what kind of indicators or Ichimoku or any indicators you use, if you become confident, if you become overconfident towards your direction, then that will be a bad loss when it goes backwards, because you don't expect the opposite side of the market direction. So these are 3 simple examples of the bad loss. And also, you're right. You put other more comments than that, and these are very good actually. Yeah. Hi Powell, thank you for joining. Gold below my account 2 times this year. Oh, already 2 times. Yeah, you really have to learn about the money management strategy. Yeah, very important, very important. Yeah. Hi Kay, you are so humble. Sure, sure. Thank you for your words. Yeah. Do you use the ATR for stop loss? I don't use the ATR. I don't. Hi Kawei, thank you for joining. Good to see you. Yeah, sorry to hear that. Yeah. Blow up account 2 times is not really good. Yeah, you have to learn about the money management. Yeah, so these are 3 simple examples. So let's think about the good losses in contrast. So good losses will be the opposite from bad loss. So these will be limited risk per trade, like 2%, 1%, 0.5%, depending on the market condition. You can control the risk per trade. So you don't want to take trades with a 2% risk or 3% or 5% risk all the time. You want to know how to control the risk per trade depending on the market. For example, in my case, when I see the trend based on the KTS, when I see the trend, then I go for 2%, or sometimes I go even like 3% or 5% of the risk per trade, because I expect the price will be going upwards, following the major trend direction. But when it's in the range, and when I see the market in the trend in smaller time frames, then most likely I will go for smaller lot sizing. I mean the smaller risk per trade, like 1%, or when it's in the range, and when it goes up and down within the range, and I draw the support and resistance lines, and within that range, I take contrarian trading. In that case, I only take 1% risk per trade. So depending on the market condition, you have to change the risk per trade. But even before that, you have to have the limited risk per trade, and that's the very key for the good loss. Another point is that the loss to run profit. So we are investing money into Forex or into stocks or into whatever the market it is. We invest our money into the market and we get return in the future. So terms might be different from scalping to intraday to swing trade. The terms might be different, but universally speaking, we have to take losses to run profit, because we are investing our money and time into the market. So loss is like a cost. So when you purchase something, you pay money in order to get the return, the goods or the meat, vegetables, whatever you want to. You pay the money and you get the goods in return. So it's like the same idea in trading. So losses do happen in order to get the profit in return. And the third thing is with expected scenarios, also important. We have to, whenever you buy, let's say, and when you put the stop loss, at that time already you have to expect that the market will be going down also. The market would never go the market does not always go towards a direction. Sometimes it goes back against you, but that should be expected also when you take trades. So yeah, 3 simple points about good loss. Okay, so limited risk per trade and loss to run profit, and with expected scenarios. You can take losses, and these are considered to be good loss, in my opinion. Okay. Hi Narendra, thank you for joining. All right. Gold only for pro traders. Sure. Yeah, gold can be quite violent at some point. Yeah. Hi, J Keynes, thank you for joining. Good to see you. All right. So this is the first step. So we have to know about the good loss and bad loss. You know there are good losses and bad losses. We have to know 2 different loss criteria. So that's the first step. Know 2 kinds of losses. And the second step is to identify which loss the previous trade was. Okay, so when you look at the market like this, and let's say you take a buy, here because you saw that this is uptrend, and you take a buy here, and afterwards the price goes backwards, and you might get loss cut in here. You might get stopped out maybe. So in this case, whether this was a good loss or bad loss depends on the view towards the market at that time when you are taking buy. So if you are not expecting the market goes against you and get the stop loss, then that was a bad loss. But if you're expecting the market reversal in this area and still take that stop loss, then this is a good loss. Because at that time, you must know that this is only 2% or 1% risk per trade. And also, you know that losses do happen to run profit. So after you get loss cut here, you can still look for the buy chance maybe. If the price keeps going upwards for some reason, if you look at the indicators or Kumo or Kijun-sen direction, or when you start to see the market renews the recent high upwards, then you start to know that this is the continuous uptrend, and you can still look for the buying chance afterwards, after you get the loss cut. But if you become too much like upset after the loss, and in that case, you might not gonna be able to find the next trade chance. Although this is going up, you might just regret because you were taking buy here, and you are right, but afterwards it went backwards, got the stop loss, and afterwards the price keeps going upwards. So you get regret by the stop loss. So you have to identify which loss it was. It's very important. Not only to have to understand the meaning of the loss, but also to be able to switch your mindset to prepare for taking next trades. Otherwise, you cannot really take trades. You cannot really look for the next entry chance because you will be regretting, or you will be blaming the market, or you will be blaming yourself, and you might lose the next chance. In this case, the price goes upwards, and you might not be able to take trades afterwards because market keeps going. So we have to cut the loss or break even and just prepare for the next trades logically and objectively. So that's why identifying which loss it was is very important whenever you take trades. Alright, let me come back to some of the comments here. Loss is the mother of all learning experience. For every loss, we need to learn why it happened. Sure. Why is a very important question. Yes, why? Why it happened, you always have to think about that. Alright, Mark, thank you for joining. Good to see you. Aruki, gold is for a very big account balance, not for pro traders. This is no pro or small trader in Forex. It's gambling either ways. And especially if you don't know about the loss, then that will become a gambling too, because you don't know anything about the important numbers to be consistently profitable. Okay, any way to identify fake reversal like this? There is no, there is a way as you keep watching the market. For example, if I take trades on this kind of market, then most likely I will be looking at the 5 or 15 minute chart. First of all, in my own strategy, I look at the smaller time frames of M5 or M15 to take trades. And for example, in 1 hour chart, there should be uptrend in this case. In 1 hour chart, it should be uptrend, and I try to look for the buy chance. So this kind of move happens. I know that already. So I keep watching the market until I set the break even. And so in other words, until I can set the break even, I keep watching the market, and whenever it goes backwards, I just cut the loss. Possibly with break even, I just cut the loss, or even before hitting the stop loss, I just cut the loss and prepare for the next trade. And when I still see the 1 hour chart is moving up, in this case, then I'll still look for the buy chance. But if 1 hour chart is flat already, 1 hour chart becomes flat, then I wouldn't look for the buy chance here. So that's the only difference. So yeah, to directly answer to your question, I don't really try to identify the fake reversal like this, but rather I try to deal with it while watching the market real time. Yep, Thunderpole, I'm winning. All right, that's good to hear. Okay. I think that stop loss distance is too small. Maybe in a small time frame we can expect it. Sure. So yeah, this is just example. So maybe I should have been taking like here, or yeah. So this is just an example. So in a real trading, most likely if I take a buy here, then my stop loss will be slightly below the recent low, which is at this level. So yeah, maybe this was not a good example to show you the stop loss or the loss, but at least you get the idea, and it should be fine. Hopefully you get the idea. So yeah, just remember that there are two losses, okay, good loss and bad loss. So you have to identify, you have to be able to identify which loss it was whenever you take trades when it comes to losses. Take trades only with the direction of the Kumo, filter with a 200 MA, buy the pullbacks as long as there are no crossover Tenkan Kijuns and above the 200 MA. Sure. So yeah, I look at the 200 MA too sometimes, and I capture the direction of the market too. Yeah, so that's reasonable. That's reasonable to filter with 200 MA. Yep. Hi Harsul, thank you for joining. Good to see you. Alright, so here is the third step. Okay, third step is to find a way to turn bad losses to good losses. Okay, so whenever you have some bad losses as a result, then you have to turn it to good losses whenever you take losses next time. So that means you have to learn from your own losses. Yeah, so here is a way to how to turn the bad loss to good loss. And first of all, you have to calculate the risk per trade each time. So every time you take trades, so I will just change it to every time. Every time you take trades, you have to calculate the risk per trade. And then you know the risk in terms of the percentage of the account, and also the in terms of the pips, and also the money. You know which risk you're taking per trade. So that's one way to turn this bad loss to good loss. And also the loss to run profit. You can switch your mindset that the losses are there to run profit. And how to take loss is important. And ask the question why you get the loss in order to get returns profit. Why you get the loss is the right question to ask yourself, so that you can turn the loss to run profit over time. Hi Ignacio. Oh, thank you for your words. Yeah, I got the haircut. It's finally I got the haircut now. And I feel much fresh now. So yeah, so that's the second point. And the third point, create a scenario for losses before taking a trade too. So for example, in this case, you take a buy here because you see this is uptrend, and you take a buy at the breakout, but you have to expect that the price might retrace backwards too. So by knowing that, you can prepare psychologically, and also when it really happens, then you just get stop loss. Logically, you just get the stop loss and prepare for the next trade. And when you come back to 1 hour chart or bigger time frames like 4 hour chart or daily chart, and when you find this is still uptrend in the bigger time frames, then that means you can still look for the buy chance. But if this is not expected, if this stop loss is not expected before taking trades, then you might get frustrated psychologically. You might get frustrated psychologically, or you might get upset. So you lose the next chance. So you have to create a scenario for losses also, not for the wins, but for losses too. And that's why you have to put the stop loss reasonably. Which important win rate or risk to reward ratio, how to patient is Forex? In my opinion, risk to reward is much more important than winning rate. And actually it depends. I think it depends on the trade style. If you're a scalper, then winning rate might be more valuable. But if you are a day to swing trader like myself, then risk to reward ratio will be more valuable. So depending on the trade style, it should be different. And for myself, I am a day to swing trader, so I value the risk to reward ratio more than the winning rate. Hi Kay, can I send you an email with a question? Sure. You can just send me your question, through the email. That's fine, of course. Okay, so, and finally, let me just present how you can exercise the mindset towards losses in your daily life. So this is kind of fun to do. So sometimes when I go shopping or when I go out to the cafe or wherever, I think about these things in my daily life. So here are some carrots. So you go to the grocery store, supermarket, and you come to this carrot section, and you pick which carrot to purchase. So in such a case, how would you pick which carrot how would you decide which carrot to buy is a question. So when we go to supermarket, usually we just pick up whatever it looks good or whatever it's cheaper maybe, or whatever it's it's on sale, maybe you pick that one. Or if it's a carrot, maybe whatever carrot it looks good, you just pick that one, maybe unconsciously, right? That's the typical type of a decision making process. And in a daily life, it's okay, but when you do it in Forex, it hurts yourself psychologically. I mean, you get losses in the Forex or any stock markets or any investments, you get losses. So when you happen to see the losses, then you get upset in Forex. So in carrot, right, in the case of a carrot, you might not gonna get any losses. You just get that one and just take it home and just cook it. So you don't really focus on losses, but you can think about the supermarket shopping this way too. For example, when you pick a carrot, imagine the risk per trade. So risk per trade in a supermarket situation will be similar to price per vegetable, price per carrot. Okay, so there are price tags, and you might see different type of carrots. So you just pick one that you think it's good. So the price per vegetable, price per carrot will be the risk per trade in that sense. And also in Forex or stock market, loss to run profit. You have to have a mindset that the losses are there to run profit. So in the supermarket shopping case, that will be the quality per carrot or vegetable. So they are all carrots, and they look similar, but when you take a look at it closely, then the color might be different, the weight might be different, and the quality might be different among each carrot. So the loss to run profit is like similar mindset when you pick up the carrot in terms of the quality per carrot. And also, you have to create scenarios before taking trades. Okay, so when you pick up carrots, then you don't want to pick it up blindly, but instead you pick that one because you want to cook something with it, I'm sure. Or maybe you just simply just boil it, or maybe you just simply steam it and just eat that carrot. But however you cook, you have to create scenarios before you pick the carrot. I'm sure you do. Maybe you have a list of the shopping, like a shopping list, and you go to the supermarket because you want to cook something, most likely. But so whenever you want to pick up something, you have to create scenarios like what to do with it, how you cook it is like creating scenario. So and by combining all these three categories, you pick one single carrot, or one single like egg, or piece of meat, or a piece of corn syrup or whatever, or milk or yogurt, whatever. You just pick that one. But every time you pick, try to pick them consciously, right? Not unconsciously, but consciously. By thinking these three categories, you can experiment and pick that one. And that way you can train yourself whenever you take trades in a real-time market. So you look at the price tag, and you might, before looking at the price tag, you might see different kinds of, for example, yogurt, and there are different kinds of brands and different kinds of taste also. And so the price will be different among the yogurt. So once you pick that one, for example, you can go for it like a $3 yogurt or $1 yogurt. When you pick which one to get, you can it's like you are thinking about risk per trade. So this is $3, this is $1, and which one to pick is like how many risk per trade you're taking, like $3 or $1 risk per trade. In order to get return, it's not a profit, but in order to get the yogurt in return. And also, the quality might be different. Among the yogurt, $3 yogurt, the quality might be different. The expiration date might be different, and the package might be different too. So you pick which one to get among those $3 yogurt. So that's the next step. So it's like thinking about losses to run profit. So you want to avoid losses, and you want to pick up the yogurt that looks good on the package among the $3 yogurt, and also you want to pick one with the latest expiration date on it. Yeah, so when I go to supermarket, usually I pick the one that's kind of in the back of the aisle. I mean, the back of, how to say, like the aisle, so that I can get the latest version, latest vegetable or latest yogurt or milk. Because in front, usually these are relatively older. Things are laid out. But when you pick the one that's more, how to say, like a more inside, I mean, more towards the back side of the aisle, then you get the more fresh one usually. So that you can avoid the losses too, or you can get the better quality ones among the same brand or same price tag. And then create a scenario. If you pick up the yogurt, then how do you eat it, or how do you use it is the scenario. So, and if you can think of all these, then the point is that you don't regret. Even if you open it and even if it tastes not good, you can still learn from it. You don't regret. You just decide not to pick that one anymore. But if you unconsciously or emotionally pick the vegetable or yogurt or milk or whatever, if you do it emotionally, then most likely, or when it goes bad, then and when it goes out of your scenario, then you might regret. Maybe you might regret the fact that the taste not really good, or it's not really good quality. So yeah, so this is just one of the examples that I wanted to show you today to train yourself for your trades. And this is kind of the exercise that I do in my head whenever I go to supermarket, or when I go some shopping, or when I go to some restaurants, for example. When I try to pick which menu to eat at the restaurant, I think about all these. So I take time. I take time to pick which one to get. I create scenarios. So sometimes I wait for like 5 minutes or 3 minutes before ordering something. I wait. Just like taking trades, I wait for a couple minutes so that I wanted to make sure that I don't have a second thoughts or third thoughts before going for the one that I want. So yeah, so maybe you can try today and tomorrow. If you go shopping, or if you go to supermarket and you want to pick up some eggs or like milk or vegetables, you can exercise like this so that you can psychologically prepare for the losses in trading. Okay. Alright, so let me come back to your comments now. So, where was I? Hold on. Okay, I swing trade K because not patience. Okay. Yeah, so swing trade will be would require more patience. Yeah, because you have to wait longer, and when you hold a position, then you have to keep holding it longer. So it requires more patience than scalping, obviously. Although I know the losses will come, but I still feel very bitter. Okay. So that means that so that's like the money management strategy in that case. If you expect that the losses do happen, and if the losses actually happens, and if you still think it's bitter, then you have to look back on trades, and you have to get the overall result in the past. Yeah, for myself, I don't feel painful whenever I do losses, because in the long run I can make profit. I know that, and that's why I don't really feel painful for losses. So it's about risk to reward ratio and the winning rate, numbers to take trades, and so on. Yeah. GBP/USD 1.246 key level. All right, thank you for letting us know that. Loss is considered as a cost of doing business. Minimizing loss, cost, and improving trade strategy, business operation can maximize profit. Yeah, exactly. So we have to take trades in a way that we create the business plan. That is very true. All right, Wesker, long time no see. Sure. Yep, you got 16K subscribers now. Sure. Yep, thank you. Yeah, it's growing. Yep, and thank you for your support. Thanks to all your support, I do these lives every day. So I really appreciate your continued support and continuous motivation to join these lives every day. I am learning Forex is a key. Consistent profit is money management and risk ratio to 1 to 2. Yep. Do you ever trade using the bounces of Kijun-sen? If so, could you make a video on it for educational purposes? Sure. I will talk about the Kijun-sen bounce. I have actually talked about this, and I will talk about it too in my future lives. Alright. Hi Sasan, thank you for joining. It's been a while. Thank you for joining. Good to see you. Yeah, and Eric, you're welcome. Mark. Alright. Oh, it's already the time to finish the live for now, because I will be switching the live to the membership. So, every carrot is good for your eyes. Never seen a rabbit with glasses, sure. Yeah, every carrot looks good for your eyes. So, when you see uptrend, maybe every market looks good. It's like after you see the market, you can look for any buy chance afterwards. But whether you can take trades on buys in the real time is the key. Okay, so yeah, so that was a little talk about the losses today. So once again, 3 simple steps to avoid losses. One is, remember that there are 2 kinds of risk of losses. 2 kinds of losses, okay? Good loss and bad loss. And then identify which loss the previous trade was, whether it's a good loss or bad loss. Try to identify which one of these losses that was in your past trades. And then find a way to turn bad losses to good losses every time you take trades. In that way, psychologically, you can avoid losses. Because once again, losses do happen. So you cannot avoid taking losses. So we have to switch our mindset for what purpose and why you take losses in trading in order to get return in the long run. Okay, so thank you for joining everyone. I will be ending the live anytime soon. So yeah, so once again, I do lives every day. So tomorrow I will give you an overview of the market, forex pairs and commodities, oil and gold, and also some indices about the market to prepare for the upcoming week next week. So tomorrow the live will start at 6 p.m. JST, which is 9 a.m. UTC. So I hope to see you there. And for those who are members, I run this Ichimoku community here, and I wrote the book Ichimoku Basic Master Book, which is available as one of the perks to join on this community. So, and that is actually based on these Ichimoku original books. So this is a monthly subscription, and when you see the join button on your YouTube platform, that's where you can join on this Ichimoku community, where you can get the Discord group, and also I do the membership lives every week. So after this public live, there will be a membership live. So for those who are Ichimoku members, or what I call Ichimokers, I will see you there. Otherwise, I will see you tomorrow at my Ichimoku Weekly Forex Forecast. Alright, so you have a great weekend, and stay healthy, and stay gold. Bye for now. Mata ne. Thank you.